Hi, I'm Victor. In this video, I wanted to go over my recession investment strategy for February 9th, 2023. The S&P index today is down almost 1 point. The last 4 out of 5 trading days have been down. We've had a couple of days where the S&P went down about 1%. So it's really showing signs that, hey, we're going to go down to some extent here in February. And I'm a believer that we are in a recession here in 2023. It's going to last maybe 2 years, give or take a year. And in that time, I think it's really going to affect stock prices. And it certainly is something that I adjust to. There's both opportunities in the marketplace as well as hazards and risks. I want to align my strategy with the way that I want my portfolio to perform and the way that I want to live my life, frankly. So let me go over a couple of things in this video that I'd like to cover. First, my strategy for short-term returns and long-term returns. And then I want to give you a glimpse of the 7 recession stocks that I own that I believe are good stocks to own in this recession. So let's get into it. Now, history doesn't repeat itself identically, but it certainly rhymes. And recessions happen. They're a natural course of our economy. Every 10 years or so, a recession happens. And in looking at history, we've had recessions. Really, the one that sticks out for me is the dot-com bubble. I think prices for stocks stayed down for some time. The NASDAQ really took longer than the S&P or the Dow. And then we had the subprime market meltdown recession, where from 2007 to 2009 we were in a recession. So that was a recession we had there. We had one come up because of COVID. COVID happened. We had to lock down the economy, and for 2 quarters we were in a recession. Now the Federal Reserve got us out of that recession very quickly by pumping trillions of dollars into the economy, which lifted the economy, but I believe artificially. So now it's time to get back into an economy that can stand up on itself. And I think we have to, get through a nice recession so that, companies will really focus on making the products and providing the services that the economy truly needs. And that's where I think we are now. And I believe this is just the beginning of this recession. In 2023, best case, I believe we're going to be up 5, maybe 10%. That would be my best case scenario. But I think we can end up negative in 2023. We can end up down 5, 10%. I don't think much more, but I think that's the range where I'm thinking. And it all depends on, earnings. It depends on, how much the Federal Reserve is going to increase interest rates. But I think there's a long way to go to really fight inflation. There's a long ways to go to get prices of certain stocks in certain industries back to a normal state. So short-term horizon planning. First, I look at my needs. What kind of income do I need? My milestones. Do I have any big expenses coming? And then really important is mental health and stress management. The stock market could be a lot of fun, but it could also be quite tragic. If you see your stocks really, implode, it's got to be really hard. So we got to really, manage all of that. In my opinion, I try to manage it so that no real bad day or real bad week or real bad month really takes me down. It's just part of the process of finding great companies to invest in, holding them, and making money for my family. There's going to be risk in the short term. Stock prices, I believe, will continue to fall and trade sideways at best. There's going to be bad news on companies. We see it in certain sectors. The bad news just keeps on coming. Earnings have been, somewhat low, and I would say flat. And in some industries, you see revenues really drop. And big losses at a bad time could also be a risk. Again, if you need the money and you have a big loss, it's very hard to sell those stocks. So it's good to plan for that. The opportunities are to always do your homework. Analysis, studying is the best investment you can make in your investments, period. If you become more informed, more intelligent, more capable, really improve your skill set, that's a big opportunity, especially right now. I'm a proponent of investing in stable dividend paying companies. Dividends do 2 things. One is they give you a good cash flow in a recession. 2, intellectually or psychologically, it gives you that boost of, okay, great, stocks may be flat or down, but AT&T just paid me a really nice dividend and I can reinvest that. And bonds can really show up. Bonds, the yields on bonds are between 5 and 8%. That's an awesome return for 2023, and it really stabilizes my portfolio. So let's talk about long-term planning. First, I think it's a great opportunity to really invest in companies at a discount during a recession and keep those over a long period of time and make a great return. So that is an opportunity that exists. And my need would be that in 10, 20 years, there's a certain part of my portfolio, I want it to triple. So that's one of my needs there. The other is, I want to retire at some point. I want to provide, for my family, when I'm gone. So those things are definitely part of my long-term plan. And I want to confirm that I'm on the right course. So every so often, every year, every 2 years, I want to course correct and make sure that I'm investing in a way that's providing the right return so that I have my goals met. There's risks in the market over the long haul. Stock prices could perform poorly and it really affect the return rate. So if you're expecting, hey, I'm going to make 7 to 10% return each year, but instead you're at 4 to 6, it really affects how much you have after 10 years. So that's a risk. Other risks include that industries that you're invested in dramatically change and they become less valuable or they become more valuable. But certain industries have been impacted by the constant change in innovation. For example, if you owned a taxi company, Airbnb and Lyft really changed your world. Uber and Lyft really changed your world. And taxi companies aren't worth the same amount of money today as they were 20 years ago. Opportunities. So this is a great time to invest in companies you believe in, especially small, mid-sized companies that you think are going to be big companies at some day. This is the time when the recession is upon us. Companies are sold at a discount. So it's a great opportunity to invest long-term. And it's a great opportunity to really double your net worth. Doubling it every 5 years should be the standard. The rule of 72 should be in effect. And I think that is an opportunity right now that all the dollars invested in a recession will come back and reward you over time. So here are 7 companies that I believe are very good stocks to hold in a recession. These are all stocks that I own and continue to buy in all cases except for Kroger. I already have a significant position in Kroger and I don't want to buy any more just because I don't want to throw my portfolio out of balance. But let me take it from the top. So Kroger is a big grocery retailer, and in a recession, people are going to continue to shop to get their food and their groceries, and they may stop eating at restaurants and eat at home more often. So I think Kroger is going to have good constant demand for their products and continue to pay that nice dividend. CVS Health, they operate many pharmacies. I'm sure you're familiar with them. And they're actually getting into the urgent care business as well. Healthcare is one of those things, whether it's a recession or it's a boom cycle, we're going to take care of ourselves. You're going to take your child or your loved one to the doctor to get them taken care of. And you're going to go fill your prescriptions at CVS. While you're there, you're going to probably pick up some of the items that you need at home as well. So CVS should be a really good recession-resistant company. They pay a nice dividend. Elevance Health is a healthcare insurance company, and people aren't going to drop their insurance during recessions. In fact, it's a law that you have to have insurance in the US. Having said that, Elevance will see that their subscribers will continue to stay with them and pay the policy premiums. Next one is AbbVie, a pharmaceutical company that's just been a consistent payer of their high dividend. It's been a stock that continues to grow. Not a ton, but just grow each year. Last full year, they grew 5%, and they continue to just perform as expected. So AbbVie is one of my recession-proof stocks. The next two are a little bit out there, but I'm going to throw them out there. Zoom. Zoom is a great recession stock because as companies have to do more with less, Zoom is exactly what they want. They don't want their employees getting on airplanes or or getting in their cars to spend $50, $100 of gasoline to go visit a customer, or to have an in-person meeting, or maybe they need to reduce their real estate footprint, and all that means they want to get on Zoom more often. So I think companies, educators, people that want to meet will meet more often on Zoom because it's more efficient, less expensive, and it really is good for in a recession. And the last one is Airbnb. Airbnb is a global network of property owners that rent their property on a short-term basis. And I think when you hit a recession, people have to be resourceful. They have to start doing things to generate some income. And I think as people are getting laid off or maybe had to retire early, they might rent an extra bedroom. They might rent that guest house. They may rent their own home, and for a part of the month or a part of the year to make ends meet. And frankly, there's a lot of real estate that is in the residential side that is underutilized. Airbnb is a global network of property owners that put their properties up for rent on a short-term basis. And I think in a recession, you're going to see a lot of micro entrepreneurs, continue on Airbnb and join Airbnb so that they can rent out their properties. So those are my 7 recession stocks that I own. Again, I continue to buy into almost all of them, except the ones that I already have a very high position on. So that's a video on my recession investing strategy, how I'm seeing things as of February 9th, 2023. I hope you found it interesting. Please keep in mind, I'm not recommending you buy any of the stocks that I own. I'm just sharing my experience as an individual investor, sharing my perspective, my analysis, and where I'm going with my portfolio. Good luck investing in 2023.